Hello, 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 and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. This is 50 pips. Here we go, here we go, here we go. 11th of May, 2017. No trade calls, no recommendations. Every response for their own stuff. We're here for educational purpose only. Let's do this, guys. So it's been a while. Not an awful lot going on, but still wanted to try and keep these up. So good to see everybody in the room. How's everybody doing? Anybody looking at anything in particular? Anybody trying to figure out what to do? We'll try and keep this short as usual. Hey, how's it going? How do you deal with this slow market? Well, you can shop for vintage watches on eBay. That's always a good thing to look up at auctions. But you know, it depends. Everybody's going to try find a different way of dealing with things, right? So again, I'm going to give you an idea, a quick update of what's focus in terms of bigger picture, right? And what we're doing as usual, try to talk about some live stuff, some of the things I'm doing just to keep things real, right? So in terms of the most interesting, I'll go through it in a second. But from this morning, I think the most interesting plays from this morning were trying to get long Aussie and Kiwi for scalps. But I'll go through that in a second. So basically here, in terms of the bigger picture, what I would be focused on is, you see we got these peaks here on the Dow, right? Hold on. Oh, is this not loading my, hold on. For some reason, it doesn't look like it wants to load my screen capture tool. Oh, that's unfortunate. Okay, but you see how we've got these highs here, basically on the Dow, right? So basically these highs here on the Dow are really going to be key, right? And the main dislocation here is the fact that you're seeing that basically Dow is holding below that level, right? And you've got that the NASDAQ is really ripping above. So that's really, for me, the most interesting development across the board, right? That's really the most interesting development off the board. Is NASDAQ going to fall in line with everything else, right? Or is is Dow, S&P, Russell, and everything, are they going to end up catching up with the Nasdaq? That's the really big that's a really big issue, and that's the most interesting to keep an eye out for. So the other thing I'd say, so watch Nasdaq very closely, right? High, we broke through it on Macron right here. And, you know, if we trade back below that breakup zone on the NASDAQ, then things will likely get extremely interesting. So especially because the weekly candle will probably look fairly heavy. So the big focus is really going to be how we trade here on the NASDAQ. Is the NASDAQ going to continue to stay bid, right? Is volatility going to continue to hover at lows without any real movement? Or are we going to see what we feel would be the healthier move? The most normal thing is to see volatility pick up, move back towards the high double digits, right? And that would probably mean that the NQ ends up coming back in line, as the real tell is the fact that the Dow is not following, that the ES is not following, right? But we'll have to see, but something will have to catch up, right? So that's really the most interesting thing. Now I've got a little issue with my cursor. I'm blocked on this screen, so I'm not going to be able, I can't go onto the other screen without rebooting everything, and I don't particularly want to do that, so I'm not going to be able to see all the questions. So I'll try and guess what everybody's asking. But basically here, you know, so that's the most interesting thing going on here. If you look at the NASDAQ on a, let's do this here, let's go back. On a shorter time frame, on something like a 1 hour chart, as long as it holds above that break, you know, it's going to be, sorry, I'm not on the, and I don't know why this is really slow today for some reason, right? But if you look at the NASDAQ on the 1 hour chart, right, you see that it's trying to come back off those highs. And, you know, that's just the big question. But right here, you're likely going to see a lot of chop. Clearly, you still have a lot of open gaps, but you've got a lot of chop areas on this that might have to be resolved. So again, I think that's the most interesting dynamic there in terms of what's happening on the equity side. Now, the other thing, why do we say long Aussie and Kiwi? Well, let's see if we can put it onto a double screen here and do it this way. And I think this is just to talk, you know, I know you guys like this, so let's talk a little bit more technically about these. So Aussie and Kiwi, okay? So we're going into a rate decision last night, right? So what's happening as we're going into this rate decision? So these are both on a 1 hour chart, right? So you're going into a rate decision and you've got Kiwi pukes into a really important support here, right? Yeah, I don't know why this is really messing around. So Kiwi pukes into a really, really important support and can't get a lot of follow through, right? At the same time, what happens on the release? Well, Aussie tries to also puke, of course, in sympathy, right? Because it's a really nice sport, doesn't want to leave its friend by itself, and decides to puke too. But what's particularly interesting is you see Aussie's holding strong ahead of this thing. So the only thing we can deduce here is that there's still buyers here, that this puke here was simply, this is the way we're reading it, right? This puke here was simply a little move in sympathy for what happened on New Zealand, so that this is, we would call technically a little bit of a BS move. So the edge here, or the play, is to come in and try and get long for an aggressive scalp into the morning, stops below the previous lows, and see if we can get a little pop. You know, it would be a little gift from the gods to see a move all the way back up into here. But in terms of an extremely tactical scalp, right, in terms of morning trades, you know, anywhere into those 73.40s all the way back here, it's an interesting 20, 30 pip scalp, right? And the other thing is also on Kiwi, if you're betting as the flows come in and it's not getting any real follow through right here, right? It's not getting any real follow through. Well, then what you would expect is that a lot of people that have been shorting this aggressively into those lows, right, they'll either have to cover, we'll start to get some dip buyers coming in. So also this is an interesting one to try and play for a little bit of a pop, 15, 20 pip pop. Now, as long as we don't hold above these bigger levels, above these breakdown zones around, you know, 68.50s, it could easily continue to get sold. But, you know, any little pop is interesting, and, you know, what we consider even back into this level would be a little bit of a gift for the gods. But I think it's interesting, you know, when you see this dynamic, especially, we think it's very interesting for students of the markets, you'll tend to see after those Kiwi or Australian rate decision, you'll see the other pair trends to kind of move in sympathy. But it's always very interesting to see when one of the two doesn't get follow through, or one of the two stops at an interesting level, because usually they're fairly interesting scalps. They're fairly interesting areas to take advantage of this dynamic. Does that make sense? So that's something we'd almost prefer to trade Aussie on the Kiwi rate decision and Kiwi on the RBA rate decision, simply because it's interesting. Does that make sense? Just give me a hands up if that makes sense. Again, getting a bit lost here because I'm dealing with a bunch of funny messages on my computer, so I'm sorry, but I'm trying to do the best I can, okay? Does that make sense? Any comments, any questions? Lewis, how's sound? How's it going? Because I'm not sure if this is coming through okay, because I'm getting all kinds of error messages here. Okay. So the other is the video, is the screen share okay too, Lewis? Okay, cool, thanks. So the other interesting thing is going to be crude today, right? Crude's particularly interesting. So if you look at crude on no matter what kind of time frame here, let's get on a weekly. Really, the question is, as we go into this 25th of May, right, is this going to pop? Is this not going to pop? What's the score here with OPEC, et cetera, et cetera, et cetera? So for guys who've been watching this for a while, you know, we were short for that move down. And you see here, it's trying to base And the big question is, how are we going to deal with this trend line, right? This whole area, right? This breakdown zone. Now, almost, I would say, you know, the trend lines are interesting, but you can always redraw a trend line if you're not happy with prices doing. So we're not huge fans of trend lines, but clearly here, this is the level to watch, right? If we move back onto a daily, so let's just clear this up. So up here, we had the initial sell, right, on that daily close, which that's done and dusted. So we were looking for the move back to 45 aggressive. That's all finished. We can clear up the chart here. So what's happening here is we're back into this breakdown zone. So keep an eye on action, on market action here. If we can aggressively get a bid and move back above this whole area, then clearly you've got the potential for a much bigger correction, right? Where would that bigger correction be to? Well, you can look at it using a number of different indicators, looking at it in a number of different ways, but whether you're looking at the moving averages, but what we would prefer to do is we would prefer to use something like a fib tool here, right? And what we'd say is that retracement off this bigger puke highs into lows, right? We would expect that above that zone, those 50s are going to come back into play, right? Surely you'll get sellers all the way back to the 78.6, but we think 50s come in play. So right here, we're almost stuck. If you're looking at it in terms of psychological numbers or psychological levels, we got the 45, which is holding to the downside, and you're going to have the 50 mark. That's going to be the cap to the upside. That's what we would be looking at, right? And you know, we'll have to see how the market navigates around these zones, but clearly here there's about even risk to the upside or the downside, you know, and again, if we get back below that trend line, if the 25th of May we disappoint, then we would not be surprised to see sub 40s, but it's a particularly interesting zone here. Okay. The other thing, we got Super Thursday here, so keep a heads up on what's going on UK GPB. And the other thing which we think is particularly interesting also here, based on what's going on, whether you're looking at it in terms of yens or gold, which is, you know, essentially the same thing. It's all the same chart. We like gold here, and we're looking at gold to try and front run this 50 back here. We're looking at gold trying to base ahead of this 50 back to try and get a little bid and move back to the higher level, right? This is a fairly interesting dynamic we're focused on. We think this is quite nice. But again, that's pretty much what we're focused on right here, right now. Let's see what we get. I hope that was useful. I hope the dynamic or the discussion of Aussie versus Kiwi, Kiwi versus Aussie was interesting. I'm sorry about the tech issues. So hopefully we won't have them the other time, but I really still wanted to continue with the session. I'm sorry we haven't kept these up. We missed 2 weeks, I think, but you know, it also depends on other commitments and how interesting the market is. So, but again, everybody, thank you so much for sharing. Thank you so much for liking. Thank you for all the support. Thank you for all the comments. Always much appreciated. Let's see what we get today. And as always, just trying to pay it forward. Just try to highlight some interesting things. Hopefully help some people out. Okay. Have an awesome one. Take care. Talk to you guys soon. Bye-bye, guys.